Hi guys, I am Bhavik Wagela and in today's video we are going to learn about standard costing. So firstly, before we dive deep into this topic, what do we mean by standard cost? A standard cost is nothing but a planned target cost. Any businessman before starting any activity would like to plan the cost. Okay, let us take an example of parlay hide and seek cookie. For example, the businessman decides that to produce 10,000 packets of hide and seek cookies, it will need, so it budgeted as to be 100 kgs of flour at the rate of 25 per kg. So its total planned cost, or what we can say its target cost, was 2,500. But in turn, what actually happened? To produce 10,000 packets of cookies, it actually used 120 kgs of flour at the rate of 30 per kg. So the total amount came to 3,600. Now what actually happens? Your planned was 2,500, that is 100 into 25, 2,500. But your actual cost was 120 into 30, which is 3,600. Now, anyone would like to know or justify this cost, that why is the difference in this particular cost? So, if we look it into totality, you have a total difference of 1100, right? Why? You were supposed to spend 2500, you actually spent 3600. So, this is something that you spent extra, right? So, 3600 minus 2500 equal to 1100. So this is your variance 1100. Okay. Now let us understand whether it is adverse or favorable. You are supposed to spend 2500, but you actually spent 3600. You spent more than what you were supposed to spend, and hence this will be 1100 adverse. So this is about the total material cost variance. Now let us further break this down into two parts: material price variance, material usage variance. Now, if you can see in the table given over here, what happens is you are supposed to use 100 kg at the rate of 25 per kg. Okay. And what actually happened, you use 120 kgs at the rate of 30 per kgs. So, if you can see, there are two differences over here. Firstly is the quantity. You are supposed 100 kg and you use 120 kgs. Also, there is a difference in rate. You are supposed to purchase it at 25, but you purchased it at 30. So this gives rise to two more variances: material price variance, material usage variance. So how do we find material price variance? It's simple. We compare both the rates. Okay. In this case, our standard rate was 25. Our actual rate was 30. So we take the difference of both, which is 5. 25 minus 30 is 5. And now I multiply this by my actual quantity. So my actual quantity in this case is 120. So can I say that my material price variance 30 minus 25 multiplied by 120, okay, which is 5 into 120 equal to 600. So in this case, the actual rate was 30, your standard rate was 25. You were supposed to spend 25, but you spent 30. So this is again an adverse. So material price variance is 600 adverse. Now let us understand about material usage variance. What happens in case of material usage variance? You are supposed to purchase 100 kg of flour. You purchase 120 kg of flour. So what happens is you compare both. You are supposed to purchase 100 kg. You purchase 120 kg. Means you purchase 20 kg extra, right? So 20 kgs multiplied by, this time you multiply it by your standard rate, not the actual rate. So the formula here will be, it will be standard quantity minus actual quantity multiplied by the standard rate. Our standard rate is 25 per kg, correct? So this is how we find our material usage variance. If you have any queries, comment below. Happy learning.